What are key ratios? Financial ratios help creditors, investors, and managers assess a company's financial position by analyzing key metrics in areas such as liquidity, efficiency, profitability, and market value. These ratios provide insights into a firm's operational success and overall financial health. Liquidity ratios evaluate a company's ability to meet short-term obligations. The current ratio measures current assets against current liabilities, with a ratio below 1 indicating liquidity risk. The quick ratio, also known as the acid test ratio, focuses on liquid assets like cash and marketable securities while excluding inventory. The cash ratio considers only cash and marketable securities. Offering the most conservative liquidity measure, turnover and activity ratios assess how efficiently a company manages assets and working capital. The asset turnover ratio evaluates how effectively a firm generates sales from its total assets. The inventory turnover ratio measures how frequently inventory is sold and replenished.
Right now, Kalkine is offering a 7-day free trial on its premium research reports. Get access to data-driven market insights combined with an in-depth analysis on financial markets across the globe. Don't miss it. Subscribe for the free trial now.
The fixed asset turnover ratio indicates how efficiently fixed assets such as property and equipment are utilized. The total asset turnover ratio assesses overall asset efficiency in revenue generation. Profitability ratios determine operational efficiency and financial performance. The gross profit margin reflects how efficiently a company manages production and costs. The operating margin, also known as return on sales, measures how much profit remains after covering operating expenses. The net profit margin evaluates the percentage of revenue converted into net income. EBITDA, or earnings before interest, taxes, depreciation, and amortization, is commonly used to compare companies and assess cash flow. The operating cash flow margin calculates the proportion of sales revenue converted into operating cash flow. The return on assets, ROA, assesses how effectively a company utilizes its assets to generate profit. The return on invested capital, ROIC, measures how well a company allocates capital for productive investments. The return on equity, ROE, determines the profitability generated from shareholders' equity. Market value ratios help investors analyze a company's stock performance. The dividend yield ratio indicates the percentage of dividends paid relative to the stock price. The earnings per share, EPS, metric calculates net income per share of common stock. The price to earnings, PE, ratio compares the stock price to earnings per share, with variations such as trailing PE, which is based on historical earnings, and forward PE, which is based on projected earnings. These ratios collectively provide a comprehensive picture of a company's financial health, guiding investment and strategic decisions. For more related videos, please subscribe to the channel and click the bell icon to get notifications.